Hello, hello. Hope you guys are doing well. I'm going to be talking about limit orders and in particular, like how you can master limit orders to always have an advantage in the markets. Hopefully, right? So, what are limit orders and why they matter? A limit order lets you specify the exact price you're willing to pay for shares rather than rather than accepting whatever the current market price is. Think of it as placing a reservation. You're telling the platform, in this case Fliq, I want to buy shares, but only if I can get them at this price or better. Unlike market orders that execute immediately at current prices, limit orders sit in the order book and wait for someone willing to trade at a specified price. This gives you complete control over your entry and exit points. And limit orders are crucial because prediction markets can be very volatile, right? A market might show 65 cents per share when you're looking, but by the time you place a market order, it could have jumped to 70 cents. So with a limit order, you set your maximum at 65 cents and won't pay more. This control becomes especially valuable in fast-moving markets where prices can swing dramatically within minutes. So let me get into and show you as well how to really use limit orders and how to set custom prices when it comes to limit orders. So let's see. What market should I go with? Okay. Let's go with this question. Whether Shubman Gill Shubman Gill score a century during the fifth test match between India and England at the Oval? Now, I think possibly yes. Maybe. And this is what like the current market sentiment also shares, that it is possibly yes, right? So what will I do? Here you see this box is indicating market. When you click on this, you will see limit order. Correct? So now I believe he will score a century, but I do think 72 cents is really high. And what does it mean? Let's say if I'm on the market, if I'm buying at 72 cents, that means if he actually scored a century, my return will be 34.45%, right? However, now I'm like, okay, let's say during the match something goes wrong or, there's still some time. I'm like, okay, I'll put it at 70. Okay. I'm going to say I'll buy 10 shares at 70 cents. I'm putting my limit order and I put a buy. And here, voila. So my transaction was not successful and I will be able to see my orders here. Okay. Now, as you saw, when placing a limit order, you will see options for both market and limit, right? And I selected the limit order option to access price control. Because at market, I would have had to buy at this price for sure. So if current shares are trading, or in this case, like at 70 cents, 72 cents, and you think they're overpriced, you might set a limit order like I did at 70 cents. I can also do it even lower. I could do like, let's say, I think at 65 cents, right? Here. So, but remember, I've set these prices, but this order will only execute if someone is willing to sell at the price that is 65 cents or lower. It will not execute if there's nobody who's willing to sell it at that price. Correct? So now in terms of sell orders, the order reverses. If I would have had any shares, let's see, if I have shares in any market, let me go to my portfolio. So here, I have shares on this market. Will Fliq be winner of one of the HDM Atlas Accelerator? So I want to sell. So currently it's 56 cents. I actually bought it at 58 cents, right? And which is higher than what it is. So I don't want to be at a loss. So I'll put a limit order over here. And I'll say I will execute it at 70, right? And I will put my max, or I'll say 5, I will send 70. And then I'll put 80, right? I'll max out, I think it will be 4.62. That's it. So now I've put the limit order cell also, correct? So you can set the quantity of shares for your order, and on platforms like Fliq, your limit orders remain active until they're filled or you manually cancel them. There are a lot of platforms where you're not able to do so. Since we're talking about this, let me maybe just show you quickly as well how you can cancel your limit orders. So over here, you can see, right, that you have, these are all limit orders, and it shows over here they've not been filled, correct? Or here, like 1.81 out of the 10 have been filled. Here, 3.99 shares out of the 5 have been filled. So what can I do? I can put a cancel and it will be cancelled. So there will be no more order for that particular thing, right? It's gone if you see from here. So yes, so these are like limit orders. So now how do limit orders provide trading flexibility? Limit orders transform basically how you approach prediction markets, actually by effect almost every kind of trading market, by removing to make, instant decisions. You can set your preferred price and walk away, letting the market come to you. That means like if only it hits the price you want to buy it at, it's like haggling, right? But instead of haggling with words, you're haggling with a price that you're like, okay, this is the price I can be comfortable with. So this is, and also please note, like, this is particularly powerful for dollar cost averaging. So instead of buying all your shares at once, you can, like you saw, I don't know if you saw when I placed earlier trades on the Fliq market, I said, I'm going to try to sell at 70 cents and then at 80 cents, right? So what did I do? Instead of buying all my shares at once, like I placed multiple limit orders at different price levels. So if you want to buy 100 shares total, place orders for 25 shares at, let's say, 55 cents, 25 at 50 cents, 25 at 45 cents, and 25 at 40 cents. Because limit orders can also help you catch like market reactions, right? So news events often cause temporary price spikes or crashes. By having limit orders ready, you can automatically buy during like the panic selling or selling during euphoric buying, right? For example, there's a market on Yannick Sinner now. So Yannick Sinner is yet to play. It's going to be a while before he plays. And, until then, a lot of things can go wrong. However, let's say if there is, in terms of, let's say, if I have the no share, and if Yannick becomes injured, so you can quite imagine people will start selling because they're like, okay, he cannot win. So in that case, I can literally buy at cheaper prices because people are, like selling very fast and maybe he actually wins the tournament. So that's how it really like you can take advantage of limit orders. Now for position exits, limit orders just let you set profit target and stop losses simultaneously, right? You might place a limit order above like 20% above your entry price to capture gain while also setting another limit order 15% below to cut loss. That's completely up to you. And this basically trading in this way removes emotion from your trading decisions. So instead of watching charts and making impulse moves, your predefined strategy executes like automatically. Okay, this is also important. So on Fliq particularly, we also offer like rewards for limit orders. So if I go to my XP, you will be able to see there's a maker trade here. So I got like 50 XP over here, right? Like these are all maker trades. That means these markets or our markets are actively promoting limit orders or maker orders. Now, limit orders are not always maker orders. It's only when a limit order is filled, it becomes a maker order. And this is something which can really introduce a lot of liquidity for markets. So, yeah, so I would say I think the last thing which remains is when to use limit versus market order. So use market orders when speed matters more than price precision. If breaking news makes you confident about, market direction, a market order ensures immediate execution before price moves further. Market orders work well for small positions where a few cents difference won't significantly impact your returns. They're also better for highly liquid markets where bid-ask spreads are tight. Correct? Now, you should choose limit orders when you have a specific price target in mind. If technical analysis suggests a market should bounce at 45 cents, place your limit orders there rather than chasing the current price. Or for example, if you see a market which is there on Fliq and on other prediction market as well, and the other prediction market, let's say it has more volume, you can actually put the limit price comparing it to the other market, and you can really profit from it. So I think this is how you can really use limit orders. I highly encourage most people to, no matter what the market, to use a limit order. And just remember, for routine position building, limit orders help you accumulate shares at better average prices over time. For urgent exits, when you need to close positions immediately, I think market orders ensure execution. So I would say consider using limit order as your default choice, switching to market orders only when immediate execution is critical. And this approach typically results in better entry and exit prices over the long term. The key is matching your order type to your trading strategy and market conditions. And limit orders provide you control, often better prices, while market orders provide you speed and certainty. So I hope this was useful, and let us know if you have any questions, and keep trading and be confident.